high interest rates kill those stocks.
How's it going, everyone? This is Daniel, and in this video, we're going to be talking about Tesla stock. We're going to go over exactly what to watch out for Tesla stock for this upcoming week. We also going to be going over ARK Invest and Cathie Wood going over and explaining to us exactly why her fund actually got targeted by algorithms, short sellers, and why her fund is actually performing very bad this year. So we're going to be talking about all this important information, and then later on at the end of the video we're going to go over a full breakdown of Tesla stock, a technical analysis. So all this important information in this video coming up. As you can see over here, we have a Tesla stock that is sitting at $932.57, and last week we actually went down 6.83%. We have Elon Musk that continued to sell, and he's actually getting super close to finishing his sales. So as of right now, he only has 3 million shares left for him to sell, so that is pretty close, and I believe he could be able to finish selling his shares by the end of the year. So this is going to be the main catalyst that we need to be watching out for Tesla. We might potentially see a Santa Claus rally happening pretty soon as we get closer to the end of the year, and Tesla stock also could potentially see a slight pump up to the upside. So that's going to be one of the important things we need to be watching out for Tesla stock for this upcoming week. Later on we're going to see a full breakdown of the technical analysis. Now let's talk about ARK Invest. So we know Cathie Wood, ARK Invest, loves Tesla. However, as you can see over here, year to date, their fund is actually down 22.05%. This is the ARK K ETF. If you go over, look at all the other ETFs that they hold, RKQ, the ARK F, all of them are actually down for the year. When you compare it to the overall stock market, year to date, the S&P 500 ETF is up 24.7%. While you're looking at the ARK K ETF, it's down 22%. So last week's video, Cathie Wood talked about exactly how this is unusual and how she was kind of shocked in a way that the overall stock market is up significantly and her fund is definitely underperforming by a lot. So we're going to be watching a full detailed breakdown of Cathie Wood explaining, why short seller algorithms targeted some of the main stocks in her fund. So let's check out this video, and I'm going to come back and we're going to go over and look at Tesla technical analysis.
Cathie, I'm really curious about the impact of higher interest rates. We've seen some of the growth names just generally really waver in anticipation of higher interest rates. I would love some specifics from you on how you think that some of your investments might be impacted.
Well, I think they already have been. I think that's what started in February once vaccinations were hitting critical mass, or we could see they were going to hit critical mass, and we were going to get back to work. I think everyone was working very hard, but back into the physical world. And so this assumption that the Fed was going to tighten started to make its way into the market. I think that's one reason many of our stocks are down. Some of them are down 50 to 60%. And what we see happening today is the flip side of, well, it's a little bit like what happened during the coronavirus. As we entered it, there were algorithms out there. And this market is, I think, controlled by algorithms in the short term. And so what happened in the short term as we went into the coronavirus is algorithms seized on two variables. How much cash do companies have? And are they burning cash? Those two variables took some of our stocks down 50, 60, 70%. And those who took those stocks down, the algorithms, the momentum players, the obvious trade, those people were all wrong. Those stocks were some of the biggest rebounders because, especially in the genomic space, the genomic revolution helped us get to that vaccine and to those tests much faster than what would otherwise have been the case. Today, what do we have? We have algorithms focused only on the valuations of stocks today, maybe trailing 12 or maybe this year, very short term. So they are thinking, okay, high interest rates, kill those stocks. So we think it's already taken place. And by the way, and I think, Taylor, you mentioned this earlier, interest rates, after Chairman Powell said, maybe this is not transitory inflation, the bond market rallied. And so I think the bond market is saying that that point of view is incorrect. What I find so interesting about movements in the market today is the fear of interest rates and inflation picking up really started in February of this year as people were getting vaccinated. And the markets went after our strategy to express the risk and basically shorted our strategy. What I find so interesting about this is that the market's multiple, broad-based market, so S&P's multiple on next year's earnings is at 24 times. NASDAQ's is at 31 times. These are near record highs, except for the tech and telecom bubble. If inflation is really the risk out there, why isn't the entire market's multiple coming down? I remember when I started in the business, late 70s, early 80s, Art introducing me to Capital Group on the West Coast, and I'll be forever grateful. Back then, I think by the end of the bear market in 1982, the market's multiple was down to 6. I just mentioned that we're up to 24 on that basis right now. Now, you're going after multiples in our space, and what has happened, the depreciation in our stocks from mid-February to today has not done anything to our forecast. We're now just getting our forecast. We're now just getting our companies and our stocks at lower prices. So in mid-February this year, as we did our 5-year forecast, and we assume massive multiple compression during the next 5 years to something like FANG multiples, EV to EBITDA in the 18 to 20 range. When we did that in February, at the peak of our strategy, the compound annual rate of return we expected from our portfolios was roughly 15%. Today, doing that analysis, some of our projections have increased. The compound annual rate of return we are expecting is close to 40%. So in February, we were expecting a doubling over 5 years. Today, we're expecting nearly a quintupling over 5 years.
What are the areas you really think are big winners coming forward, and what are the losers? And by the way, I don't want you to mention Biden in the loser category. That's my job. I'm just joking.
So I think the platform that has been hit the hardest in this correction is the genomic revolution. And the reason is many of these companies are losing money. We're in this is a movement in its infancy. And I think the most exciting thing is we can now isolate mutations in and among our 6 billion bits of code in our genome. So 3 billion base pairs, 6 billion bits of code. Until recently, we could not isolate those mutations. Mutations are the earliest manifestation of disease. And now what we're beginning to understand is the convergence between and among DNA sequencing, artificial intelligence, and CRISPR gene editing, as well as other gene therapies, is curing disease. We have functional cures now for beta thalassemia, sickle cell disease, ATTR. Now, these are blood-related diseases, but the companies involved are now focusing on some of the most complicated diseases like diabetes. And what we're learning from companies like Freenome, which is a private company focused on the convergence of AI and DNA sequencing, we're learning that the body sets up for disease, and that artificial intelligence is able to discern when that setup is taking place. So wouldn't it be wonderful to discover cancer in phase 1 or stage 1, or maybe even before it starts, before the cells start replicating? So the Genomic Revolution Fund that we run has been hit very, very hard this year. Now, it had a magnificent last year, up 180%. I think it's down 35% this year. we're probably more excited about that opportunity in terms of how it's going to transform lives.
Before we talk about Tesla stock technical analysis, I would really appreciate if you subscribe to the channel, turn on notification bell if you want to stay up to date on what's going on in Tesla stock every day. So as you can see right here, we have a Tesla stock that filled the gap, which is right around over here, which is fantastic. We were expecting for it to fill the gap for several weeks. And we have a support right around $900. And this is a support that goes way back to the beginning of the year when Tesla hit this all-time highs at that time, which was right around $900, and it pulled back significantly. So this is a significant price level we need to be watching out for, which is the $900. So if Tesla stock could potentially stay above this level, that would be fantastic. But however, we still have to wait for Elon Musk to finalize and sell his shares. So if we could potentially get a slight bump up to the upside before Elon Musk starts selling his shares, that would be good. However, if we don't see any kind of rally happening to the upside before Elon Musk sells, we might get a dip below this $900. So Elon Musk has only 3 million shares left for him to unload in the market. So once he finalizes and finishes, we believe that we're going to be getting a bounce back to the upside. So definitely keep an eye on this $900 level going into next week. This is going to be super important level to watch out for. And if we can stay above it, that would be fantastic. So definitely keep an eye on it. So the short-term price target for Tesla stock going into next week is that if Elon Musk unloads his shares, we might dip below $900. And if he decides to not sell and if we get a Santa Claus rally, we might go up and retest the $1,000 level right around over here. So let me know in the comments below, what do you think that Tesla stock is going to be closing in next week? Are we going to get a Santa Claus rally, Tesla stock going up to $1,000? Or are we going to go break down below this $900? Either way, a lot of people are excited to buy Tesla if it breaks down below this $900. If you want free stocks, of course, for Christmas, Momo is offering 5 free stocks. Check out the links in the description box below. Make sure to hit the like button, subscribe to the channel, and I'll catch you guys on another video. Have a wonderful day.